Good afternoon, everyone. Welcome to today's daily recap. I'm Evan Lazarus. I'm going to talk about today's happenings in the market. Today we started out, the market's been kind of hovering right back at highs. And if we go back to, the end of last year and throughout the course of what is the entire, 2015 complex year to date, the roller coaster really has been since the middle of February when we peaked these highs back here. We pulled back and we've been on this very turbulent ride, ever since. And every time we've gotten back to the highs, it's created a feeling of breakout, and that's I think that's natural. Most people at highs are going to want to buy, and most people at lows are going to want to sell. But the market has been, like I said, very, very turbulent. And if you look at the weekly chart, going back, as far back as, October, November, we had that October sell-off followed by that, aggressive snapback. And basically since that time, it's been, a lot of traders feeling like a hamster on a wheel, just kind of spinning their wheels back and forth, back and forth, back and forth. Now, as we sit at highs and the market, kind of teetering on what looks to be like new highs or more highs to come, the only thing I can say, that is contrary or contra to this price is volume. And, what you want to see on a breakout, on any breakout, or breakdown for that matter, so whether you're breaking to the upside or you're breaking to the downside, especially out of a consolidated range, is you want to see volume expand. And as we kind of sit here and basically close the week out and close the day at highs, you can see volume just clearly becoming, anemic at these levels. So not a lot of committed money stepping into this. And what you want to see is you want to see a pop. You want to see, big money come in, big volume. It's a sign of committed money where you know that you have substantial buying from the big boys, the pension funds, the hedge funds, the mutual funds, the institutional money, the real committed money that's going to come in and attack this market. And that's just not what you're seeing here. So it is a bit troublesome. Now, that doesn't necessarily mean that the market is not going to go higher or can't go higher or won't go higher. It just means that in terms of breakouts, breakouts that occur on declining volume have a higher percentage of failure, meaning we break out and then we can't support or sustain this breakout, so price, ultimately fails. So we have to be on alert for that going into next week. And I think the other thing is we have to be on alert for just, one of those turns where, just like we sat at lows, the next day you come in and we're gapped up, where Monday morning we could come in and be gapping down and that could cause, some downward price push. So it is definitely been very, very tricky to buy at highs and to sell at lows. And the market has kind of, I know, worn a lot of people down, but certainly price looking like it wants to go higher. So we have to respect price, but ultimately, we want to see it happen on an increase in volume. And volume to me at these highs has typically been getting lighter and lighter and lighter. And as I go back to that weekly chart, you can see these push at highs here has not really come on any, here's the highs from, back in February. And then, over here, it's been kind of a very, weak display of volume overall. So we'll see what next week brings as the market continues to, like I say, just stay in this very, very challenging trading environment. Today was a very, very quiet day. As I actually bring up here, here's Jeff Cooper's daily market report, and Jeff actually put up a post today. I'll click it here between the ticks. And basically what he says here, it seems that Mr. Follow-Through is MIA again. The S&P set up an NR7 day, and an NR7 is a narrow range 7-day. Basically, it's the narrowest range of the last 7 trading days. Price alternates between range expansion and range contraction, and typically large moves follow these NR7 contractions. So, we'll take note that today's price action, which you can see very clearly right here, was the narrowest trading range that we've seen in the last 7 days. An NR7 is a signal, can sometimes be a precursor, as Jeff said, to a larger move, whether that move be up or down. So we'll look for potentially, a larger directional move going into early next week, as this could be sort of that like think about it like a coiled spring where you coil up and then you pop out of that coil. So we'll continue to look for that. In terms of stocks, biotech has really kind of lost its luster. It is retracing here. It is retracing on declining volume. You can see the volume waning here as the bounce from this, from these sharp sell-offs develops here. So biotech to me still creeping higher, but certainly not, as the market sits at highs, you don't certainly see the enthusiasm that you did previously. And if we look at the weekly, again, becoming very choppy in this general range over the last 8-10 weeks. But nevertheless, biotech continues to be a must watch. As although the general ETF and the overall sector may not be doing much, there's always those individual biotech plays that are have been relatively very, very good performing trades over the last couple of months. Another sector kind of on the radar and about to go into earnings season. A lot of retailers set to report, especially the Home Depots of the world, the Lowe's, the Targets, the Walmarts, all those big box retailers. I believe Bed Bath Beyond had earnings today, and you can see what happened there. So definitely something to potentially key on next week for opportunity, as some of those names are setting up nicely. And in terms of momentum names, with the Googles not really doing much, certainly not displaying any real relative strength here as the market, like I say, teeters on the brink of new highs. Certainly very lethargic price action here. We did see Netflix today. Netflix has been a stunner, if you will. First we had our earnings blast off that built a nice base. We got that break of 580 just a couple of days ago right here. It pulled back, and then on the heels of news today, gapping up pretty substantially and again, still trying to trade higher. So Netflix continues to push aggressively to the upside, while many other names, here's Apple, again, just a general lethargic trade, I think overall is the best word I can use. They're not necessarily compelling longs, they're not compelling shorts. Stocks that are sort of what you call one-time high flyers that have been stuck in the mud for a relatively substantial amount of time. And although we did get a little shake of the tree here post earnings, it's been a rather muted type of trade since that time. So we'll some of the, like I said, some of the more momentum-driven names not necessarily performing all that well. You have a couple, Tesla, one worth noting. Tesla's been on the move, but definitely getting a little long in the tooth here as we're back into, let's call this a pretty key area of resistance. Just a stone's throw above. Probably going to have to contend with some of these prior highs that you see, acting as turning points just a few months back. So, man the waters carefully. You are the captain of your ship. It's important that you know the sea and what you're steering through, as it is a very, very turbulent market. There's always opportunities here and there, but you really have to think about it in terms of being very patient with your trading, making sure you're going after very compelling situational trades. I think the mantra for many that I speak to in the active trading land is, just quite frankly, do less. At some point, the market will tip its hand. You'll get hopefully what is a large directional break. An opportunity will start to present itself. Banks and a lot of the financials. Here's the XLF. Kind of hovering here on resistance. And looking like there could be opportunity for more upside in some of the banking names. But again, difficult by and large to be a buyer at resistance. So banks definitely should be on the radar. Bank of America sitting at resistance, and Citi sitting at resistance, and Goldman, kind of sitting here resistance, but all strong-looking names, Morgan Stanley. Just not a lot of momentum or enthusiasm right here, right now. So, stuff to have on your immediate watch list going into next week. But as always, be very careful about buying at highs, as it has not proven to be a very profitable trading approach. So, caution is always warranted, especially with a very, very light volume Friday, where the market kind of, is pegged right at prior highs. As always, everyone, have a wonderful weekend, and we'll talk next week. Enjoy.